Good afternoon. George Cavaligos for DragonSlayer. That wasn't so much fun today. It's deja vu. Remember what happened from the other big sell-off on Friday. Sunday night we make a minor new low by a couple ticks, and then a big rebound. We go back and retest the highs. Then we get the sell-off yesterday. Last night we go down, we make a new low by a couple ticks, and then the grind higher all day. I think that's the Fed out there, guys. So one of my customers told me today that the Fed has bought 61% of all net treasury issuance over the last year. It's tough for a market to go down when you've got a buyer taking 60% of the supply out of the market. We'll see. I'm still negative here. There's a big cluster of resistance in the 10-year up here. 129.18 is the 61% fib retracement. 129.21 and 129.24 are the big support levels that we broke on the way down. A lot of times we'll go back and test that. I don't expect us to go back there. I've got my stop on the remaining 1/3 of that short position from yesterday sitting right up above 129.24. You know, hopefully you guys have followed along. You still have a short position left from yesterday's highs. Hopefully you guys covered some last night when we made the new lows, and I didn't, unfortunately. But we're going to see holiday markets now. It's going to be tough. I think we'll slip into a bit of a range trade right now. I would say 129.18 should be the high, and I'm looking for a move back down at least a couple ticks through that 129.04 level. If we do break down there, cover some of this last short. I just put out a little tweet a couple minutes ago before I'm doing this video saying that if you didn't have any shorts left from yesterday's highs, it's time to add them up here with a stop above 24. That's quite a bit of risk. You know, the market's trading, where are we at? 13 on the 10-year right now. So if you're short from 13, you're risking 11, 12 ticks. I don't know if you want to cover at 04. Look for a possible move below that 129 even level again. I think we're going to go and see new lows here, guys. I really think we're going to go and test that 127.23 low again at some point here. Maybe next week. We've got you know, the holidays. We got the unemployment number Friday. Strange holiday markets. You know, stocks are trying to hold their lows from earlier this morning and bounce a little bit. I think stocks are probably a buy here. Little double bottom, that 1389 area. I'd like to see them rally nicely here into the close. That might give us a little bit of fuel for the bond market sell-off. I think that's the scenario I'm working with. If it trades above 129.24, I'm probably wrong. Then we're seeing overlap with the previous lows, and it's not as negative as I'm looking at right now. Again, if I'm wrong, the Fed's in the way. There's still some underlying demand for treasuries. We'll see. If you had a chance, take a look at the webinar that I did with Fari Hamzy, HamzyAnalytics.com, his website. Jill and I are trying to send out the link to it. I'm not sure if Fari is cool with that yet, but we'll get that sent out to you soon. Kind of veered off the rails at one point. Somebody asked me kind of a bit of a strange question. I started getting into the kind of kooky stuff. You guys know that I used to be a Boy Scout, and I'm always be prepared. You know, I live by that motto still. It was ingrained at me at a young age, and I sounded a little kooky, I think, in the webinar at one point last night. Just ignore that stuff. You know, be prepared is my motto. It doesn't have to be yours. We'll see. Have a great night, guys. We'll see you tomorrow morning, bright and early in the email.